Welcome back to Stock Tricks with Nick for this week's trading recap, December 21st to the 24th. Merry Christmas Eve as well. So you can see this week I was up $2,191, building off the momentum of last week, put together two really solid weeks. Last week we were up 8%, this week up 5.3%, so really finishing off this year strong, which is exactly what you'd like to see. If you're new to the trading channel, I do a trading recap on Friday, and then on Sunday morning, we'll put together a breakout watch list that we'll be reviewing later on in the stream today. And then on either Tuesday or Wednesday during the week, depending on the week, we do a live stream. We update the breakout watch list, and we take a look at any stocks that the audience wants to see. So if you think this is something that interests you, please subscribe to the channel, Stock Tricks with Nick, and follow me on StockTwits, Twitter, and TikTok. Really quick, a couple of notable winners. SPWR and FCEL wrapped up both of those trades this week, 25% and 20%. Still currently in AMSC and GRWG. Those are up 23 and 20% at the time. And for the notable losers, had 3 losses this week, all under 4%. That's exactly what you want to do. You want to let your winners run out, and you want to cut those losers as short as possible. That way, you don't even need to be winning 50% of the time to be profitable. So right now I'm trading about 45% win rate, so only win 45% of the time. But because I let those winners extend and cover many different losses, we could stay profitable. All right, let's jump to the agenda for today. So we'll be going over the market as a whole, Sunday's watch list, the watch list we did on Tuesday from the Market Movers live stream, cover the open positions I have, and a breakdown of some finished trades. Really quick disclaimer, all of this is for educational purposes only. None of this is stock or financial advice. This is just what I'm doing as a trader. Please do your own due diligence. Trading comes with its own financial risk. So quick look at the overall market. Really flat this week. S&P 500 0.5% down. The Qs down just 0.16. Dow Jones flat. And FFTY, the IBD top 50, down a little bit more, about 0.4%. But even though the markets were flat, down a little bit, you could find some strong winners. Renewable energy, those were killers this week. And then for setups, the high tide flags continued to break out and hold those breakouts. So that's what I was focusing on this week. That's how I was able to squeeze out a really solid week, even though the markets were basically flat. And it was a shortened trading week. I'm doing this at 2:30 today, and that could be some cause of the flat market. People just trying to get into the holiday, not trying to do too much this week. So let's take a look at the charts really quick. So S&P 500, and let me take trade history off of now. So S&P 500, forget this candle, not quite sure what happened here, but you have Monday, Tuesday, Wednesday, Thursday. You can see just riding that 20-day simple moving average. That's the green line you see, but nothing really important there. The Qs, similar story, a little bit better price relativity compared to S&P 500. That's sitting right on the 8-day exponential moving average. And honestly, this looks pretty nice. You had that flush, and then things got nice and tight again. If this was a stock, this could be a tradable setup, but that's QQQ. And Dow Jones, again, just moving sideways right at the 8-day exponential, 20-day simple moving average. But you can see price relativity compared to the QQQs not holding up as well. I guess this week it did fine, but overall not as strong. All right, let's jump back to the Sunday watch list review. So again, we do those Sunday mornings, so make sure you check those out. I'll leave a link to last week's video at this point. But really solid returns. We had 5 stocks break over 10% on the week from when we called it out. 2 losses over 5%. The KBNT was the 20.5 loss. That really brought our average down, even though you're never going to take a 20% loss because this was not, or this was a gap down actually. We'll cover this in a little bit. But still, even with that 20% loss, we more than made up for it with all the other names showing strength. The average gain for the watch list, or gain loss, was 3.1%, so 3% return this week, while the markets were basically flat. So let's jump into a couple of these. I'll cover the setups for LSPD, CRSP, and the 2 losers, KBNT and NIU. Let's start with the winners. LSPD, this one I actually took myself. We were looking at a high tight flag through here, so 105% move up, and then from the peak, the pullback was only, at the time it was 10%, and then we had that nice flush on Monday, and that kind of set up the trade for me. So that was 13% off the highs, and this is the candle that I got in at. We opened lower, undercut all those previous lows, which you love to see if you're outside of the trade already, or not in the trade already, because once you do that, all those stops get hit and everyone in the trade is a stronger holder. And then we rallied all the way up and recaptured over the previous day's high and recaptured the 20-day simple moving average and the 8-day exponential moving average on the way up. So I bought with the break over the previous day's high, around 60.08, and then you see the next day in a really strong volume. The volume on this red day, that's the quadruple witching. Don't worry about the Friday volume. You're going to see that in a lot of the charts that we cover. But really good buying volume on the way up to recapture that high. And then the next day, solid follow through. I think that was up about 10% that day. Sold some into strength there. Trimmed a little bit the next day as well as we broke over that high. But red candle closes outside of upper Bollinger Bands. That's typically a sign of a short-term pullback. So I did trim just a little bit in there. But this was the setup. High tight flag. Those were the setups that were working last week. That dripped over into this week as well. And a really nice gain with that. So my stop's at my entry on this. So it's risk-free for the rest of the trade. Outside of gap down risk, can't control against that. Speaking of high tight flags, we have CRSP. This was another one that, let's measure here. We have a 94%, so high tight flags above 90% in 8 weeks or less, and then within 25% of the high on the pullback. Pullback here was just 15%. The tighter the pullback, the better too, so 15% is great. Didn't quite wait for the 20-day simple moving average to catch up, but kept on finding support at the 8-day right here. So that was kind of what I was looking at. And then you had 3 days where the high was very, very close to each other, and it was just slightly lower than like this kind of range. And then I also noticed a downward diagonal, but I cheated in with this lower pivot buy point. So when the stock broke over the high here of 152.49, that was my buy point on this breakout day. And one thing that you want to see with breakouts is a ton of volume coming in. And that's exactly what we saw on Monday. That immediately took off, lots of volume coming in. Typically, the more volume that comes in, the stronger the breakout, and you won't see it check back to the breakout location as often. So again, sold some into strength there, and now it's just kind of trading sideways, but well above my entry point, so no reason to sell it all. We're up, I forget what it was, 13% or so on that trade, maybe a little bit more. And even you see the volume coming in on this pullback day. That's exactly what you want to see. Any pullbacks you want to see on light volume. Now let's jump to the 2 losing trades on the watch list, so I can at least show you what I was looking at. So KBNT, this had a 250% run up, and then I think it was more than 25% pullback. Let me measure it just to be sure. Yeah, 31% pullback. So not a high tight flag, but once those base out, they could get going again. What you could have done was, not that diagonal, sorry. Kind of on the shorter range through here, bought over the break of the previous high. That would have been your buy point, and it did get going. So let's see, what was this up? It was up 9% over the what would have been the ideal buy point here. Let's see, what day was that? December 21st. So on Monday, you would have had 9% up, maybe sell some into strength there. And when you see a candle like this, here, let me get rid of my notes. When you see a candle like this, that is the most bearish sign that you could get. That's a false breakout that reversed and sold off through the rest of the day, closed under the 8-day exponential moving average, closed under some previous lows, and higher volume with that sell-off. So that right there, that especially when you have a 9% up and it starts to just sell off and work against you, you scratch the trade right there. You probably would have had a stop of 5% or so. So even if you didn't get out this day, you would have been out the next day with that undercutting the day you got in's lows. So you would have missed this gap down. You would not have been hit with a 20% loss unless you were really careless with your risk controls. So even though we trade, like I like to trade the aggressive growth stocks, I have to be just as aggressive with my risk controls when I'm trading them. Otherwise, when you have big losses like this, that's going to eat away at your portfolio, and you want to keep losses as small as possible. So wanted to point this out. This looked like it was going to get going, looked like it would have been tradable, but once it starts selling off like that, you just got to scratch the trade. Another one we had down 5% this week was NIU. Did have a buyable moment on Tuesday. You have a couple of the previous day's highs through there as a buy point. So on Tuesday it broke out. It broke out right in the morning though. I don't love buying right like at 8:35. Well, 8:35 Chicago time, 9:35 Eastern, right when the market opens. So when it did that and then reversed, that's another sign of weakness. Typically when a stock breaks out like that and then comes back, I'll take half the position off just because it's not getting bought up even further. If it immediately reverses, probably something wrong with it. So you don't want too much exposure on it when it fades like that. Next day we had a red inside candle, but on lighter volume. And then today, lower lows, lower highs, and now this chart definitely needs some work before trading it. So wanted to cover both the winners and the losers from Sunday's watch list. But again, overall, very good watch list, 3.1% return, 5 stocks with 10% or more. Next, we go to the midweek movers watch list. We did that live stream on Tuesday because of the shortened week. Really, I didn't have much. I had 10 stocks that none of the setups I was in love with. And we had rallied for all of last week, the first 2 days of this week. So a lot of the growth stocks were getting overextended, not a lot of quality setups. So I wasn't crazy about any of these. The 2 that were up 2%, a couple down 6 and 4%. And during that time, our watch list was down 1.2%, while the market, I guess S&P and Dow Jones was about 0.5% up, while Qs were flat. But let's take a look at the 2 losers really quick. NTZ and AXTI. NTZ, very, very thinly traded stock that, similar to the KBNT, got nice and tight here, 20-day simple moving average, 8-day exponential right there, just closing right at that price the entire time. And then today in the morning, it got out. It was up 13%. So if you took the trade with a break over a previous day high, you would have been up 13% on the trade, probably selling some into strength there. But once it starts reversing, what I like to do is cut half the position. I said that earlier, but when you get a breakout like that, that immediately checks back to your breakout point, like on that day, I'll take half the position off. And then you see this is down 7% on the day. So from the peak of the breakout to the low, that's a 23% move. Because it's so thinly traded, it wasn't going to be something that you could put real size on anyway. But just wanted to call that out again to cover more of risk controls, not so much breakout setups. And then AXTI, same story, high tide flag that kind of wiggled around through here. Maybe this violate 26%, basically a high tide flag. Looked like it was getting going on Wednesday, squatted half the way back, and then today just dumped throughout the day, closed under the 20 and the 8-day exponential, and under some previous lows. So this is going to be a chart that needs to set up a little bit better. But again, those squats, once the stock breaks out and then squats, not much working there. So that was the midweek movers watch list. Let's go to my current holdings. So going into the week, I was heavily invested. I was on margin, had a lot of quality setups go the first 2 days. But as we hit day 7-ish of breakouts holding, the growth market started to feel a little overbought. So I was selling aggressively into the strength there, cut back from, I think at one point I was 120% invested net long. I end Thursday, today's Thursday, and Thursday only 58% net long. I have a 10.5% short position in the Dow Jones Industrial Average. And you can see I have 16 open long positions, but a lot of them, 8 are between 0 and 3%. A lot I'm just trimming into strength, and not too much with that. Really quickly, AA, that was on the breakout watch list as well. I have 9.2% of my portfolio in there, but my stop is so tight where the amount of risk that I'm taking on that trade is very little. So this is what I'm looking at right now. We'll cover a couple of these setups and then a couple of finished trades that I wrapped up this week. So let's jump back to the graph. So first, let's go current trade that I'm in, DraftKings. This one kind of didn't help me out today. This was a larger loser, but looks to be in a uptrend again, back over the 50-day simple moving average. A rule of mine is to never buy a stock while it's under the 50-day. So once we got back up, this jumped back on my radar. Penn had been doing really well, so I thought there would be some follow through with DraftKings. Had this kind of cup, and I thought this was going to start to form a handle, and maybe it still does, but what I was looking at was these 2 daily highs were basically around the same price. So on Wednesday, I bought with a break over the previous day's high, and then it kind of didn't squat fully, but I was down maybe 0.5% or so at the market close. A little bit uptick in volume, which you like to see. Both times it touched the 20-day simple moving average, and you do have this volume shelf of possible support for the name. So right now, let's see, what was my stop at? 50.75. So about, that might be a little bit wider than I should have, but that's the idea. Bought with a break over the previous high, got a little bit of volume in there. But if this doesn't work out, we cut it and we keep our losses small. That's DraftKings. Next, we have Palantir. This one, nice IPO breakout. Everyone was talking about this, up 230% from this kind of base area. Then we had a sharp sell-off, 37% from the high. And this is kind of a VCP setup, so volatility contraction pattern that Mark Minervini always talks about. 37%, 19%, and then from this mini rally to the low, 6%. So 3 times the pullbacks got into a tighter and tighter range. So what I did was buy with a break over this guy's high from December 17th. So right through there was my buy point. I did end up taking it off for a second, and then it undercut the previous low, and I think I put it back on a little bit lower. But basically, my average price was right around that area. And I sold some into strength the next day just to soften up P&L because, again, we were getting late into a breakout market. I didn't want to keep adding exposure I don't want to keep adding exposure and adding risk. If I'm adding exposure, I want to keep my risk exactly the same and kind of push my profits for more profit, not take any more risk this late into a strong breakout market. But from this point, nothing's too scary about this. We checked back to the 8-day exponential moving average today. Low of the day, hit that, held so far. But if you're not in the stock already, we're starting to see a nice pullback. Maybe a break over these highs is viable as well. But that's PLTR, Palantir. Next we have JMIA. This was a nice kind of flat top buy. So I don't know, let's do just this move. So 260% from early November 11th. Had that strong pullback. I think this was about 40% pullback the first time. You rallied up right to that buy point, or to my buy point at $41. Then we pulled back to the 8-day exponential moving average, only 14%. So 40%, 14. Tried again, and then had an inside day on lighter volume. You could see the buying volume candles much heavier than the selling volume candles. That's a good sign. And then with this inside day, with again the high basically stopping out right at 41, 40.92 on this day, 41 the previous day, 40.78 that day, 40.90 November 27th. So I put in a buy order to buy the stock with a break over 41. You can see, and what really set this up was, let me get rid of some of these lines. On the day that I bought, it opened and undercut the previous day's low. So kind of took this stock off everyone's radar. They're saying, okay, give it a couple more days. Maybe we touch back to the 20-day. But it quickly undercut the previous low. And that's when I put my order on. If we broke over 140, or not 140, we broke over 41 to buy the stock. It did. Never really checked back. Sold some into strength on the screen day. And then on the red candle yesterday, sold a little bit as well. Again, red candle close outside of the upper Bollinger Band, typically a sign that we're going to get a short-term pullback, and we did. We got a 6% pullback today, and because I took some profit, took some exposure off, today did not give back all the gains that I made this week, and that was kind of the goal of that. So JMIA, have my stop at my entry now, so risk-free outside of gap down risk for the rest of the trade. Next we have GRWG. This is one, also a high tight flag, so 134% move up, pulled down 19% through here. And then you can see the 20-day simple moving average, never had the stock close under that, so that was something I was tracking. And then similar to JMIA, this red candle was an inside day between the highs and the lows of December 11th. So that set up the trade that Monday. And then on that Tuesday, when we broke over the previous day's high, or we broke over this high point, so 34.50, that was my buy point. From then, you see volume coming in with the breakout. We had just kind of a check back day, not really a check back, but slight pullback day, lower volume on the pullback, extended even higher, and then really light volume the last 2 days of pulling back. But sold some into strength when we got that red candle outside of the Bollinger Band. And then today, I guess today was basically flat, but red candle out there as well. So that's what we're looking for. We're looking for ideally, those high tight flags. That was the setup that was working the past 2 weeks. So that was what I was going with. The 20-day simple moving average, finding some support, and then buying with those inside days really set up kind of the pent-up buying buy orders, because once we broke over that pivot, everyone was trying to get in. Everyone was watching the stock after it was pulling back. So that was one that instantly started working, and we got the big volume that confirmed the up move. And again, it broke out and didn't check back that first day. Never did it come back to my entry point. So that's good sign. Next we have SPWR. This is one where I traded it through here too, got stopped out at some point here, so missed this little rally. But when it pulled back into here, we had this mini up day that set up the trade, because again, you had a squat day, inside day, and then I was just buying with a break over the highs through here. So opened, immediately started working. Look at all that volume on the breakout. That's beautiful. Sold some into strength, and then on this upper wick, held it through here, and then we got 2 days where renewable energy, everything was exploding. So sold some into strength on Tuesday, sold the rest. Wasn't a huge position, so just kind of sold the rest yesterday with that red candle close outside of the upper Bollinger Band. And we'll let this tighten up again. Maybe we could trade it again in the future. Speaking of renewable energy, FCEL, that was another really solid trade for me. This one, again, renewable energy is super strong this week, up 400% in this rally, and then we pulled back. I think this was around 40% as well. Yeah, 42%. But quickly, you see the 20-day simple moving average ran up and never. A couple times we had lows of days, touch that 20-day, and then rally back higher. So that was what I was using to set up the trade. And then we had the inside candle on December 16th. That was the, okay, Nick, here we go. That's the set of the trade. So when we broke over the high of the previous day, December 15th high, 868, that was when I bought in. So I bought on December 17th. The next day, we had some good follow through, tons of volume coming in. Inside day, nothing to worry about, never checked back to my entry point. And then breakout day on volume, red candle close outside of the upper Bollinger Band. Likely we're going to see some pullback, but I actually sold into the strength. I had one sell basically at the start of the day, and then one sell probably like around here, around 13, yeah. So it didn't quite catch the high. Maybe it keeps going higher, but again, I went from 120% invested to 60% because I felt like the market was getting a little bit overbought. So I wanted to get as little exposure into the market as I could. So I think this was a 25% move that I was able to capture in just a couple of days. That's good enough for me. We'll let this set up again. That's FCEL. And then the last one that I'll cover today is AMCS. This was on a breakout watch list earlier, so anyone who has been following along definitely saw this. He had a pull. Let me zoom out. Really strong uptrend, 200, 50, 28, all in the right order through here. You had kind of a VCP setup where we pulled back 13% from the high here, pulled back 9%, and then bought, let's see. Yeah, bought with a break over the two highs here. So 2050 was my buy order. Bought it a day early on December 14th. Squatted a little bit, but nothing crazy. Next day, we had good volume. Volume was picking up during the breakout. And since then, this has just run all the way up. I've been selling into strength on the way up. And today we had just 2% down. This candle looks worse than it is because it's reflecting the after hours down 2.85%. But really strong move, one that we covered. So at the peak, that was a 30% move. I think right now it's up 26% from the buy point. But again, on the pullback today, lower volume, so you like to see that. All right, that is going to be the trading recap of the week. We had another good week, stacking onto the gains of last week, so really wrapping up this year really well. If you enjoyed the live stream, please leave a like. Subscribe to the channel if trading is something that interests you, and give me a follow on StockTwits, Twitter, and TikTok. And let me know in the comments any stocks that you think are setting up to break out, because I'll be doing the homework over the longer weekend and putting out that breakout watch list on Sunday morning. All right, have a very Merry Christmas, and I'll see you guys Sunday morning.